Hello friends, let us continue with our discussion on the chapter of retirement of a partner. Right? So in the last lecture, we were discussing about goodwill. That what is the role of goodwill in case of retirement of a partner. The role of goodwill is that the remaining partners will pay the goodwill to the retiring partner. Why? Because the remaining partners must compensate the retiring partner for the hard work that the retiring partner has done to earn a good reputation of the firm, right? And because of that good reputation, whatever higher profits the firm is going to earn, that will be enjoyed by the remaining partners in future, right? So they must compensate the retiring partner for that. Clear? For that, what we require is gaining ratio. The second thing we require is amount of compensation payable, right? We also discussed that if there is any existing goodwill appearing in the books, then it has to be written off among all partners. All partners means including the retiring partner. Clear? One more thing we discussed in the last lecture, that if any of the remaining partners is sacrificing on the retirement of a partner, if any of the remaining partners is also sacrificing, then the gaining partner is liable to compensate that sacrificing remaining partner also, right? If any of the remaining partners is sacrificing, then he must be compensated for the sacrifice that he has made, right? And who will compensate? The partner who is gaining on the retirement. Is that clear? Now, in this lecture, before starting with a new topic, we'll do one more practical problem on goodwill. See, A, B and C are partners sharing profits and losses in the ratio of 4:3:1. Right? B retires, selling his share of profit to A and C for 8100. Selling his share of profit to A and C for 8100. That means A and C are liable to pay 8100 to B. 3600 paid by A and 4500 by C. The profits for the year after the B's retirement were 10,500. Now what is the requirement of the question? See, you are required to give necessary journal entries to record the transfer of B's share to A and C, and to calculate the new profit sharing ratio and distribute the profits between A and C. A and C bring the necessary amount. Now they say that A and B, they have to pay 8100 to B. Clear? They have to pay 8100 to B. For that, 3600 is paid by A and 4500 is paid by C. Let's write down the facts. There are three partners, A, B and C. 4:3:1, right? 4:3:1? Yes, right. And B retires. He retires. He is selling his share for 8100. Out of this 8100, 3600 is paid by A and 4500 is paid by C. Right? The question says that the required amount is being brought by A and C. That means A and C will bring the cash into the business first and then that cash will be paid to B. But first of all, what will be the journal entry? See, the first journal entry will be A's capital account debit, C's capital account debit to B's capital account, because A and C are liable to pay to B. For that, we will debit the capital accounts of A and C and credit B with 8100. Now, for this payment, A and C will bring cash into the business. If the cash is being brought into the business, we will say cash account debit, and we will credit the partners' capital accounts to A's capital account and to C's capital account. How much cash? 8100. For this, 3600 will be brought by A and 4500 by C. Now this cash is to be paid to B. So we'll say B's capital account debit to cash account. Clear? How much amount? 8100. Clear? Is that clear? First of all, A and B are liable to pay 8100 to B. A and C are liable, sorry. For that, we will debit the A's capital account, C's capital account, right? And we will credit the B's capital account. Then, for this payment, A and C are bringing the cash into the business. If the cash is being brought into the business, we will debit the cash account and credit the A's capital account and C's capital account. Isn't it? Is that clear? Right? Then this cash is paid to B. So the first part is over. They say to give the necessary journal entries to record the transfer of B's share to A and C. Now they are asking to calculate the new profit sharing ratio and distribute the profits between A and C. Which profits? The profits of the year after the B's retirement, that is 10,500. For that we require new profit sharing ratio. So first of all, we are going to calculate the new profit sharing ratio. We'll say calculation of new profit sharing ratio, right? Now see the question. They say 8100 share of B that has been acquired by A and C as 3600 and 4500. How much is the B's share? 8100. This is acquired by A and C as 3600 and 4500. Right? The share of 8100 is acquired by A by paying 3600 and C by paying 4500. So we can find out the ratio in which A and C are acquiring the ratio of B, share of B. The ratio will be 3600 is to 4500, that is 4 is to 5. This is acquiring ratio. This is the ratio in which the remaining partners are acquiring the share of the retiring partner. How we identify? We say for 8100, A is paying 3600 and C is paying 4500. That means they are acquiring the share in the ratio of 4 is to 5. Now you know what is the new profit sharing ratio. How we calculate the new profit sharing ratio? We say what is old share plus what is the acquired share. Right? Say for A and C, what is their existing share? What is the existing share of A and C? Let's see. Existing share is 4:3:1 is the ratio. So for A, the existing share is 4/8 and for C it is 1/8. This is 4/8 and for C it is 1/8. Now what is the acquired share? How much is A acquiring? The total share of B is 3/8 and they are acquiring this share in the ratio of 4:5. That means 4/9 is A and for C it is 3/8 multiplied by 5/9. Clear? This comes to 1/6 and this comes to 5/24. Okay? So we can say now what is the new share. New share is existing share 4/8 plus 1/6. This comes to 2/3. And for C, the existing share is 1/8. What is the new share? 5/24. This comes to 1/3. So what is the new profit sharing ratio? So we have got the new profit sharing ratio, that is 2:1. Is that clear? Right? Now, what are the profits after retirement? We are given the profits after retirement as 10,500. Now, what is the A's share? A's share in profits. This comes to 10,500 multiplied by 2/3. So A's share is 7,000. And what is the C's share in profit? This comes to 10,500 multiplied by 1/3. That is the new profit sharing ratio. Why? Because the profits we are given after the retirement, for the year after retirement. This comes to rupees 3,500. Clear? So what will be the journal entry for this? We'll say profit and loss appropriation account debit, because we are appropriating the profit to A's capital account and to C's capital account. How much is the total profit? 10,500. Out of that, 7,000 is A's shares and 3,500 is C's share. Is that clear, friends? This is a simple question. The only thing here, the complicated thing is how to identify the ratio in which the remaining partners are acquiring the share of retiring partner. That you have to identify from the amount they are paying for acquiring the share. Right? The amount paid is 3,600 and 4,500. That means they are acquiring the share in the ratio of 4:5. Clear? Then you calculate the new profit sharing ratio. That you know how to calculate. Old share plus the share acquired. The share is acquired in the ratio of 4:5. So the share of B is 3/8 and that is acquired in the ratio of 4:5. And accordingly, after getting the new profit sharing ratio, we will distribute the profits after retirement that we are given as 10,500. We have the new profit sharing ratio, so we can find out the share in the profit for the remaining partners. Clear, friends? So this was the practical problem. Now let's see one small topic here. Topic of hidden goodwill. What is hidden goodwill? Sometimes what happens is we are not given the direct information about the amount of goodwill that is being paid to the retiring partner. That is a hidden information we have to identify. How to identify that? What is the total amount paid to retiring partner? If you know the total amount paid to retiring partner, minus subtract amount due to retiring partner. How you calculate this amount due? This amount due you will get from partners capital accounts after all adjustments. After all adjustment means adjustments relating to revaluation, relating to reserves and surplus, right? So what is the amount due to the retiring partner and what is actually being paid? If he is paid more than what is due to him, that is the amount of goodwill being paid to the retiring partner. Clear? Let's see a small practical problem on this. A, B and C are partners sharing profits in the ratio of 1:2:3. C retires and his capital after making the adjustment for reserves and profit on revaluation stands at 2,20,000. That is the amount that is due to the retiring partner. A and B agreed to pay him 2,50,000 in full settlement of his claim. The amount due is 2,20,000 whereas he is being paid 2,50,000. Record the necessary journal entry for the treatment of goodwill if the new profit sharing ratio is decided at 1:3. Now, let's see. There are three partners A, B and C. What is the old ratio between them? 1:2:3. 1:2:3. Clear? Now the C retires. Who are the partners left? A and B. What is the new ratio between them? 1:3. New ratio is 1:3. The first step, calculate the gaining ratio. What will be the gaining ratio? For A, what is the new share? New share is 1/4. And what is the old share? 1/3. Clear? So, for A, what is the new share? Sorry, the old share is 1/6. Yes. So, this comes to taking the LCM 12, 3 minus 2, 1/12. And for B, what is the new share? 3/4. Old share 2/6. Again taking 12. 9 minus 4. This comes to 5/12. Clear? So what is the gaining ratio? What is the gaining ratio? gaining ratio is 1:5. In this ratio, the remaining partners will compensate the retiring partner. Now, second, amount of compensation. What is the amount of compensation payable? What is actually being paid to him? Amount paid is 2,50,000, whereas the amount due was 2,20,000. So this difference is the goodwill being paid to the retiring partner. This goodwill 30,000 will be paid in the gaining ratio of 1:5 by the remaining partners. Is that clear? What will be the journal entry for that? The journal entry will be A is capital account debit, B is capital account debit to the retiring partner's capital account. What is the amount of goodwill? 30,000. And what is the gaining ratio? 1:5. So 5,000 and 25,000 in the ratio of 1:5. Is that clear, friends? This is how we calculate the hidden goodwill, that is the amount that is actually paid to the retiring partner minus the amount due to the retiring partner. Amount due we will get from the partner's capital accounts after the all adjustments. All adjustment means after the adjustment of profit or loss on revaluation, after adjustment of reserves and accumulated profits and losses, or any other adjustment also, right? So the difference is the goodwill being paid. Clear? So friends, in the next lecture, this is all about goodwill in case of retirement of a partner. In the next lecture, we are going to start with the new topic, that is revaluation of assets and liabilities. A very simple topic we have already done in the last 2 chapters, that is change in profit sharing ratio and admission of a partner. So I will suggest that you must go through those lectures first, then this revaluation will be a very easy thing for you, right? So in the next lecture we'll start with this. That's all for this lecture. Thank you so much, friends.